Thank you, sir. This indeed was quite insightful to learn about the pension landscape in the country, different states moving to different choices, understanding the challenges faced, and of course, a significant population chunk thinking that it's planning for a decade-long later activity. All right. Moving on to our next session. I think our insurance industry has grown over the last few decades, and we're in a state of reform, and it's going to impact our future. And that's very aptly going to be covered in our next topic, which is Down the Memory Lane with Eyes on Future, Musings from the Top. I'd like to invite on stage Mr. R. Kumar, Chairman, Life Insurance Corporation of India, and Mr. Devesh Srivastava, Chairman, General Insurance Corporation of India. The session is going to be chaired by Mr. G. Srinivasan, Director, National Insurance Academy.
Dear friends, good morning to every one of you. Great pleasure to be here in this global conference of actuaries. Thank the organizers for giving me and my colleagues the opportunity to be part of the first session of this conference. The subject is very interesting, down the memory lane with eyes on future. I don't think it's time for my colleagues at least to go down the memory lane. They still have active life left before them. But it's always nice to look back and see how our profession has evolved, how the industry in which we are part of has evolved, and also keep that, background and look at the future. So the way we will handle this session is all of us will speak for some time. We will speak from the perspective of the industry where we have worked over the years. So I will start by speaking on the general insurance space. I would like to talk in probably three buckets. One is from the industry, how it was during the first 21 years when I joined in 1979 till 2000 when the industry was opened up. In the second phase, from 2000 to what it is today. And the third one is how does the future look like maybe in the next decade. To start with, you will see me using the word general insurance. Till 2000, we always called it general insurance. It's only when the industry got opened up, we started using the term non-life, to which, some of us are not very comfortable in really calling this sector as non-life, which means this is other than life. So we would like general insurance to have its, right position in the insurance space. So we just go back to late 70s or early 80s. When I joined the insurance sector, not that I knew anything much about insurance, so I had to tell my people I have joined LIC. That's the only way they understood that I have joined insurance. So that's the level of awareness of general insurance at that point of time. The questions which I normally used to hear those days is, I take a policy. If there's no claim, will you return my premium back? Because nobody was comfortable in having a situation that you pay the premium, no claim, and still the premium with the insurance company. So that's a question we constantly face, but that has changed over the years. I've also come across situations where somebody will come and say, my vehicle met with an accident, so can I now take a policy and make a claim? It's a very innocent, genuine question. It's not that, he's trying to commit a fraud. So that was the level of, awareness about general insurance those days, and I think I must really compliment the industry that, they have done a lot over the years to take the industry to the situation where we are today. I'm saying this because there's a general perception that insurance was invented in India in 2000. It's not true. Insurance was really, a very growing industry even before. And I've seen the general insurance industry growing over the years. I mean, whether it is 80s or 90s, the industry was growing at 15 to 20% year on year. And I think that momentum continues even till date. Talking about low awareness, we had those days people taking the compulsory motor insurance because motor third party was mandatory. People taking bank compelled fire insurance. If somebody takes a loan, he has to take fire insurance. So they will take fire insurance for the loan amount. Then, of course, some big customers taking insurance policies. So this was the kind of insurance policies which were in the general insurance sector. So that's the first point I wanted to make about the level of awareness which was present during those days. The second is about the existence of tariffs. The way we used to, quote premiums, underwrite, was referring to a tariff book. General insurance was largely tariffed for various lines of business, whether it's fire, motor, marine, workman compensation, engineering, everything we had a tariff. In fact, I remember the fire tariff of those days, which was run into some 700, 800 pages. A real treatise on fire insurance underwriting containing the rates, policy wordings, add-ons, everything on the fire insurance. But I think over a period of time, fire insurance tariff reduced its weight and became a very small book. And then, of course, it was removed in 2007. Of course, when tariffs were removed, the idea was the market will develop underwriting skills, of course, which has not happened even till date, and we are still facing those challenges. The third aspect I could remember those days is the focus on risk management. The industry recruited a lot of risk engineers. People will go out, inspect risks, give risk improvement suggestions to the customers. We will do a lot of in-plant customer seminars, demystify insurance to people on the shop floor. So a lot of risk management focus was there those days, which unfortunately the industry seems to have lost maybe after de-tariffing. And I think there is today just giving policies, focusing on top line. Risk management has kind of lost its focus. We in fact had an institution called Loss Prevention Association of India, which was an industry initiative to reduce losses, bring about loss minimization, create a safety culture among the people of this country. A great institution was the first casualty of opening up. It kind of was owned up, and the industry is still struggling to come out with a similar initiative, though there is an understanding that loss minimization is a very important area for the insurance industry to talk about and implement. The next area which I could remember was motor third party. Motor third party was a great challenge for the general insurance industry. Fire was profitable. Motor own damage was profitable, extremely profitable. All other lines were reasonably profitable. But motor third party was a major problem for the general insurance industry, especially when the Motor Vehicles Act was amended in 1988, when the third party liability became unlimited. Huge awards used to be given by judiciary. The premium rates were not revised because of backlash from the truckers' lobby. So it contributed to single-handedly, motor third party contributed to the underwriting losses of the insurance industry for many years, till it got corrected about 10, 11 years ago when the premium rates were revised year after year. So that was an important thing I could recall. And the next is emergence of retail health. Mid-80s, the industry came with the first retail health product called Mediclaim insurance, a terminology which is still being used. And even though today we have more than 500 health insurance products, most of them still retain the framework of the first policy which was brought in 86, 87. And today, as you know, health has really become the largest part of the general insurance space. So these are some of the points I could recall of the first 79 to 2000. Then come to the next phase, opening up happens. A lot of new institutions came into vogue. For example, broking came into the Indian market, representing the customers. Third-party administrators in the health insurance space, which brought about the concept of cashless in health insurance. Then OEMs in motor insurance, convenience for customers to take policies. But obviously, it had its challenges. There was always a conflict of interest. OEMs give you premium, take claims. So it's a challenge which the industry is still struggling to find solutions. Then bank assurance. So these are, 3-4 things which came about after the industry was opened up in 2000. The second thing I could recall is 2007 when de-tariffing happened. De-tariffing of rates happened. Industry, in its pursuit of top line, because a lot of new companies had come into the market, they had to get a critical mass. Existing companies defended by reducing rates. So the rate war created a challenge. The industry tried its best to correct it. Of course, a few things happened, few things did not happen, but the challenge still continues. That is as far as the major lines of property insurance and motor. The third is the creation of pools in the Indian insurance sector. One is, of course, the terrorism pool, which happened after the World Trade Center, when the whole international market was not willing to give terrorism support to the Indian market. India did its own Atmanirbhar even at that point of time. Then motor pools, because motor was a business which was a challenge, motor third party, and the industry was, in fact, avoiding to give motor third party cover, so the pool was brought into existence. Then, of course, nuclear pool is a very specific pool for a particular company. So pools, a lot of pools came into existence during this phase. Strong regulatory framework, a lot of regulations, because IRDAI, started regulating the market after 2000. A lot of new companies came in. There was a lot of top-line focus. A lot of new products. Use of technology increased. And then the general insurance industry, discovered a new person called actuary. We were never used to actuaries till then. We thought we will do pricing as underwriters. We know how to underwrite, how to price, how to reserve, because we always reserved for IBNR as a percentage of the outstanding claims, as a percentage of the net earned premium. So that's how we managed. So then actuaries came into our life. And that continues. I'm not saying anything on that. We always thought that actuaries are life insurance people. Then, first time general insurers had actuaries. The business mix of the general insurance companies changed dramatically. Health has now become the number one. I could have never imagined this 5 years back. I always thought motor would lead for many years, which is a global practice. Fire, which is a very attractive portfolio, became very small. Crop insurance became a big line of business for the general insurers. Marine insurance almost disappeared, just about 2% now. So today, health, motor, crop is 85% of general insurance. So the traditional, theoretical-based, general insurance products are very small at this point of time. So the industry has changed dramatically. So with this, down the memory lane, let me look at future. How do I see the future will evolve in the next, 10 years? The industry will continue to grow. A 20% growth is assured for the next 20 years, 2 decades as far as the Indian market is concerned. So growth is going to be there. On the product side, I really see hyper-personalization happening. I mean, the days of thalis will be gone. I think there's going to be a la carte. So customers, you will have to really personalize for every customer what kind of product he wants. I think the customers will co-create their products, will build their own house of insurance. So the customers and the insurance industry will get into products which are very flexible, both in terms of its structure, coverages, even in terms of its duration. So a lot of innovations will happen in the product space aided by technology. So that's how I look at it. The third is technology will play a very important role. I think underwriting will be done by artificial intelligence, cognitive intelligence. There will be very less human intervention except for some high-end policies. Robotic automated processes will take over the routine operations of insurance companies, and distribution will be largely technology driven. So this is how I see the technology space increasing and playing an important role in the insurance industry. Data and analytics, real time for customer engagement, underwriting, fraud mitigation, and exposure modeling. I think analytics will be used more and more on a real-time basis by the insurance industry. On the claims side, there'll be more focus on simplifying the processes. Cashless will take a lot of importance. There'll be more cashless in every line of business, not only in health and motor, even other lines of business. A lot of technology will be used in loss assessments like drones, satellite imaging, artificial intelligence. So I think human intervention in loss assessments, which is happening to a great extent today, will also come down. Then we'll see embedded products. Insurance may even disappear in the wider products. People may not even consciously buy insurance. It gets bundled with other products which people normally buy is something which is going to happen. And we will see on the product space, not necessarily insurance. Insurance will be a part of solving a customer's overall problem. For example, in health, it is not disease he wants to solve. He wants to be well. So wellness, probably in motor, it is not motor damages. He wants to have a regular assured commutation facilities. Similarly, in home, there'll be a lot of home services which are needed by every householder, and insurance will be built into it. I think this is how insurance will evolve as part of an overall ecosystem of solving problems. In terms of regulations, principle-based regulation, risk-based solvency, IFRS will all happen in the next few years, 2 years, 3 years, even a very short span of time. On the actuaries, as everyone spoke, actuaries will play a much larger role, not only on the liability side of the balance sheet, on the asset side of the balance sheet, also on other areas like marketing, risk management, so distribution. So every area of insurance industry will have actuaries or people with actuarial skills. I think that is going to happen in the coming years. I'm sure the Institute of Actuaries of India will produce more actuaries for the requirement of the industry. Insurers will focus more on ESG, so less investments on companies which are impacting the environment. Higher premium rates for fossil fuel-based industries would happen. And then listing of all insurers will happen. This is what I will look at. Distribution side, retail will be completely technology-driven. Today you have so many intermediaries. I'm seeing all of them will converge. Retail will be tech-driven. Corporate, commercial will still be dominated by brokers because there are a lot of knowledge is needed. So this is how I see the industry evolving. It's going to be a very prosperous, customer-focused industry in the days to come. So this is how I look at it, and thank you very much. I would now request Mr. Kumar to...
Good morning, everyone, once again. President Institute of Actuaries, Mr. Arnachalam, Mr. Srinivasan, Mr. Devesh Srivastava, and dear actuaries from the past, the present, and the future, and all the other participants here today. Friends, got a lot of things written down here, helped by my colleague. I don't think we have the time to talk about so much, but then Starting off from what Mr. Srinivasan said about him calling himself a LIC guy when he joined, I think the basic issue in those days, whether it was non-life or general, basically everybody knew Life Insurance Corporation of India, so that was the way to go. And I have plenty of musings, plenty of stories from the past. I'm not going to bore you with all of that. But since this is a conference of actuaries, I think I should begin by telling you the first actuary I knew when I joined Life Insurance Corporation way back. I'm talking about the year 1985, when I first met Mr. R. Ramakrishnan. Some of you may remember him, he's no more. A fellow of the Institute of Actuaries, London, if I remember right. He was heading the data processing department at the Mumbai office. And I was posted there to process data. So that's how I started off life. And the remarkable part about Mr. R. Ramakrishnan was his phenomenal memory. We used to call him RRK for short. Some of you may know that. And I can tell you he was far, far more popular than the RRR of today. Hugely popular person. And just to give you an idea of his mental awareness, we used to do night shifts as well. And those days, data processing was those huge mainframe computers with a lot of tape drives. I don't know any of you have worked on those. So in the night shift, we were to run a valuation program written by, of course, Mr. Ramakrishnan. Somewhere around midnight, he would call. He said, Kumar, have you got that output? Yes. Can you read out the last line on that page? So I used to ask, so what about the description, He says, no, I don't want it. Just read out the figures. So I would read them out. He'll say, I'll call you back. And 10 minutes later, he'll ask me to rerun with a different set of inputs. That's what he was, so his understanding was fantastic. Working under his guidance, I really learned and appreciated the importance of precision in thoughts and execution. And that's what actuaries do. Whether it is validation checks, whether it is assumptions, whether it is all of that. Cut from this to 2 years later, when I was actually posted to the market in the field, a deep rural market of India. I used to have those ubiquitous ambassador. I don't know how many of you have driven an ambassador. And the way insurance was sold in those days was quite different. And you can imagine that selling life insurance itself was taboo in those days. Quoting from Mr. Srinivasan example of someone coming to him for insurance after the car had an accident. You really couldn't talk to somebody saying that, boss, if you're going to die, you're going to get money. That was not done at all. So you can imagine the insurance agents would really take advantage of someone like me. So one day, I'll just give you a small story. He said, sir, let's go. I want you to meet someone. He's prepared to take a big insurance. If you come, we would be able to probably get the sale done. In a rural district, South India, someone coming up to your house in a car was a big thing those days. So the agent would insist that I would have to go right up to the porch. All right. So we got down, we went inside. There was this old man, must be 70, 75 years old. So I turned to the agent, asked him, where is the life assured? He says, he's the life assured. So then I tried to whisper to him, we can't give him insurance. We don't have any plan, product, or rate for him. I still remember those days LIC has introduced the first time Mr. Bandupati was talking about pensions, so I was reminded. We had a product called Jeevan Dhara. It was a single premium plan with a kind of annuity attached to it. So I again whispered to my agent, we can give him a Jeevan Dhara policy. And the minimum ticket size those days was 10,000. So I couldn't imagine someone in that house having that much of money. But believe it or not, this old man had the money, and we did make that sale that day. So I'm talking about 1986, 87, when we started selling annuities. We had a very steep learning curve, and I think actuaries really have been the backbone of the insurance industry, particularly for Life Insurance Corporation of India. Something light, since these are musings, I think I'll just lighten it up a bit. There's this joke, a conversation between a lawyer, a chartered accountant, and an actuary. So they were discussing their preferences for marriage. And the lawyer said the marriage is not a great option due to heavy expenses involved in alimony in case of any divorce. On the contrary, the chartered accountant felt the marriage was a good option as it allowed tax deduction by opening up two income fact files and then reduce the tax burden. Of course, the lawyer will have second thoughts now after so many budgets have come. But our actuary friend had quite a different, set of ideas. He said that he was willing to marry two and have two wives. And the reason was, for having such a suicidal idea, is that, look, he could tell each of his wives that I was with the other wife and spend the day in the office undisturbed and not anyone following up with a phone call and things like that. But this is on the lighter side. But truly speaking, my interactions with actuaries has given me immense satisfaction over the years. But for this involved experience and journey of togetherness with our actuaries, I might not have been as accomplished and happy today, having spent almost 40 years with the corporation. I thank all these actuaries who have given me the perspective. Talking about today and tomorrow, I think proper communication, understanding between stakeholders in the overall ecosystem is essential. I think Supratim spoke a lot about that. And I think the understanding, whether it is government, central, state government, whether it is our marketing people, whether it is actuaries, there's a complex web of mathematical models that you deal with, but how do you make people understand all that? And it's not easy for a marketing guy to translate that. I think the variety of products, confusing customers all the more, is something that we'll have to deal with in the coming days. Simplifying products, making it easy for the Indian customer to understand is going to be very important. So I'm not going to take any big numbers, but then I'm stepping aside from all these numbers because actuaries have all the numbers with them. But we are aware of the fact that India is the fastest growing economy. We have 17% of the population and 20% of the disease burden in the world. I think we have very important responsibility to spread awareness, benefits of insurance to every nook and corner. The area of concern for Indian insurers is not only penetration and density, which are very low, but how to ensure greater insurance coverage. And Mr. Rastogi spoke about Amrit Kal. We are talking about insurance for all by 2047. I think the deliberations that you're going to have today is going to be very important over the next 2 days as to how we are going to actually make that happen. we also need to appreciate that customers' lifestyles are changing, their preferences are changing. And by nature and construct, the organizational structures are not all that flexible, and the structures of the corporations are not actually determined. So our responses and control cycles will have to keep pace with the dynamic needs and expectations. We will need to embrace technology. Mr. Srinivasan talked about that. Technology is going to be the key. So going back in 1980s, we were doing data processing. LIC has been the forefront of technology. All the insurance companies are today. So all measures need to be taken with full commitment. Mr. Arunachalam was talking about the profession. And to promote actuarial education and actuarial resources is going to be very important. Again, on a lighter note, just trying to bring back some fun into this. So when we were talking to our friends, just before we came to the conference, we were discussing how many different disciplines, actuaries are going to go out into. They've gone out into so many fields. So I was reading somewhere that, and it struck me that actuaries should not become or get into judiciary. Whatever else they want to do, they should, but not the judiciary. And you may ask why. They may pronounce a judgment, just for fun, no? Don't take it seriously. They may pronounce a judgment in their typical style as 20 years certain, and then for life thereafter. Or acquitting someone not for the lack of evidence, but lack of data. Because you guys you love data. We are fortunate that some of the senior actuaries are present here today to bless and celebrate with us. This shows their affection and dedication for the profession. At LIC of India, we treat our actuaries as as our most precious resources. You can ask some of my friends sitting here. And we have taken different measures to encourage them. So generally, it is felt that actuaries are very boring people. I don't agree. Recently, all of us in LIC, all our actuarial team, we went out of the city of Mumbai, far away on the seashore somewhere. It was good fun, I can tell you. And I think Mr. Rastogi also said it. You had fun till 4 a.m. You had a lot of fun, a lot of singing, dancing. I don't know what you did, but then they're fun guys. So I accept that. And I wish sometimes I could have pursued 40 years in the industry, but somebody asked me, are you an actuary one day? I said, no. But you spent 40 years. So I was doing everything other than actuary I was doing. But I wish I could have been doing some subjects, some papers at least. There was a lot of encouragement from Mr. R. Ramakrishnan. Somehow we didn't get into it. So Mr. Arunachalam, as a parting gift of recognition and goodwill, I would believe that being a fellow associated as part of this conference, you would at least call me an associate actuary. I'm just a fellow. Thank you very much. I wish you all success. But before I end, actuaries are great marketing guys. I discovered today. You see, Mr. Arunachalam didn't speak about actuarial science at all. He spoke about growth. He said 16% growth, 20% growth, and things like that. You guys can do anything. I wish you all the very best. Thank you.
Exalted actuaries, colleagues, and dear friends. Let me give my musings. In fact, I'm reminded, for those of you who are at least fans of asterisks, there used to be an annual Druid conference somewhere in the forest of Gaul, and the Druids would have a very closed-door sort of a conference, and the language that the Druids would speak would only be known to the other Druids. Now, I think actuaries are much the same. You people speak a language that is alien to most of us, and that is why you are the brightest and the best people that the insurance industry has. Now, having said that, I would like to give my own musings about the industry. I'm from the non-life industry as well. Something that has not really witnessed actuaries as they were earlier. It is a phenomena that happened much, much later. So when I look at my own career span, my first posting, I joined in 87, my first posting in Indore, which was a small town. There was no question of somebody being an actuary around there, and non-life certainly not, and none of us had even heard of the word actuary. It all happened when I came to Delhi on a posting. Then you started hearing about actuaries, but that was largely for the life insurance space. Much later in 1999, when I joined GIC, I mean, it was just a lateral transfer because GIC that time was the holding company. We had a chairman who we call the GOAT, the greatest of all times, Mr. D. Sen Gupta. He said that you have a postgraduate degree in physics. Why don't you dabble with actuary and try and see if you can become an actuary as well? So I said, well, fine, if the chairman is saying that, it must be having some weightage. So in any case, in your post-graduation in physics, your maths and physics actually merges. It's less of physics and more of maths. So I did have a look at the syllabus then, and I realized that you joke that the world is divided into two parts, which is the have-nots and the have-yots, because that is how the discrepancy is. Now, as far as maths goes, there is again a very clear divide. People who relish maths and people who just about tolerate it. Unfortunately, despite my MSc degree in physics, I was the one who would just about, tolerate maths being a part of whatever it has to be. So I thought that this is not my cup of tea. But then increasingly I realized how important is this trade of actuaries and how much of it we should be using. Now, if we pride ourselves and say that we are a data-driven organization, that is exactly where you come in. Now, if you look at the actuarial, what the actuary does in normal insurance companies, essentially we are limited largely to IBNR. That is the most important function. But then as underwriters, you are told that IBNR is like the love child you had. And the actuary only helps, get that child to your doorstep and knock at some point of time. Now, it's gone even further. You realize that it's not only your love child, he also has a sibling. He or she also has a sibling, which is the IBNER. And so you have two siblings that are coming and knocking at your door. Now, if that be the case, that is just a very small part, I would say, of what the actuary can do and should be doing in an organization. I have the great privilege of having member actuary here from the IRDA. Sir, I feel very strongly at that the actuary has a much, much larger role to play in an organization, especially a data-driven organization like ours. Because it is just not the IBNRs, it is something he has all the figures in front of him, and nobody can do a trend analysis better than you can. If that be the case, as a prophet of doom, the actuary should be giving the management a continuous and a constant feedback, which he should be recording and possibly sending it to the authority as well, that this is where I feel that there are certain blips, certain things that you should be looking at and taking and tackling it on your radar. This is very important. You should be doing this. Please take more and more notice of it. Now, as we go further on in this world, we are seeing how important data is becoming in our own working. We are now looking at our own underwriters being bionic underwriters, in which case he would be having enormous amount of data to his credit, and he would be taking an underwriting decision thereafter. The role of the actuary comes in immediately thereafter. He would be looking at what the underwriter has done and then, actually punching holes in wherever he has. He has to do it at the cost of becoming unpopular, but I think that is something the actuary must do because he is the main man who has all the data under his belt. And that is something very, very important that I would say. Now, I think I could go on about how much more the actuaries could do, but I would like to stop here. But I really feel going forward, there's a lot of, scope for the actuaries, the young ones also who are coming up, because we are a data-driven organization and data is increasingly becoming very, very important. So trust on the data that you have and work on it. I would just want to give a quote from Hamlet in which it is said, Hamlet says, there is more things in heaven and earth than is what is dreamt of in your philosophy. So the data part is one thing, the interpretation is something that the actuaries have to do with a lot of other things, because if it is only data-driven, then we are seeing how quickly artificial intelligence is taking over. We cannot let machines replace what you are doing today, because you are going to give that very holistic sort of a feedback. So continue that, ensure that the relevance of the actuaries continue for all times to come, and you become much, much more important in the working of an insurance and a reinsurance company than what you have today. Thank you so much.
Thank you, sir. Can I now request everyone to please take the seats in the front? Thank you. Thank you for your words. Thank you.